Looking forward to hearing from our two speakers. I'm going to introduce them and then turn it over to them. And Paul, you'll be able to share your screen. So Phil Yanella is a partner and practice leader of Ballard Spahr's Privacy and Data Security Group, and the practice leader of the firm's e-discovery and data management group. And Phil is based in Philadelphia. Great to see you. And Paul Hacker is a senior account executive at Access Insurance Services, and he is a part of our Northern New Jersey group. Gentlemen, thank you so much for your time and your insights. And I'll go ahead and turn it over to you.
Great. Well, thank you for the opportunity. Phil and I want to thank you, Stephanie, Rick, and Kelly, for the opportunity to give you all a rundown of what's going on with cyber liability today. We put together a presentation. Let me just share my screen here and find my presentation. Okay. A lot of pressure being called a hacker and doing presentations, right? So first of all, what I want to do is go through I can get my screen to move forward here. Always happens, right? Here. So what we want to do today is kind of give you an overview of what's happening trend-wise in cyber, who's getting hacked, go through some current statistics, and then kind of talk to you how hackers and cyber criminals today are doing what they're doing, how they're infiltrating networks through ransomware and business email compromise. We'll switch gears for a moment and talk about understanding what you need in the cyber policy. There are different types of cyber policies out there, whether you have a value added one through your E&O or GL policy, or whether you have a separate cyber policy. And we'll go into detail what's important from a coverage perspective as well. And then we'll spend a lot of time, and that's where Phil will jump in and really talk about the anatomy of the breach and the legal ramifications. What are you legally required to do as an organization when you experience a breach or a ransomware? And then we'll open up the floor for a Q&A. So that's kind of what we like to accomplish today. I think we can be done, Phil, with our presentation within 40 minutes, 45 minutes tops, depending upon the examples we use for case studies. And then we'll leave 15 minutes for Q&A if that's okay. All right?
Great.
Sounds good to me.
All right, fantastic. So, what's going on today? What we're seeing as advisors, I mean, anytime you go on the internet, you read your news, I don't know if you're reading papers anymore, but we're always looking every day on the internet for what's going on. We're seeing from advisor perspective, ransomware claims are running rampant. Well, first of all, what is ransomware? Ransomware is where a cyber criminal or a hacker is going to get into your system, and we'll talk to you how that happens in a few moments. And they're going to lock up your system for a bounty or a ransom. So you can't do anything with your system until they give you the key. So we're seeing these ransom amounts. Years ago, when you had a high school student writing code or a college kid writing code and they hacked into a system, they charged maybe $5,000 or $10,000 for a ransom. Today, we're seeing ransoms in the amount of $1 to $5 million. We actually had a client, we can't disclose the name, but they had a cyber event 2 days ago where the ransom was $5 million. So, and we'll go into more detail on what happens and why it's important to have the policy and how it all works. That's kind of what's happening from a trend perspective. How are hackers getting into the system? There's something called social engineering. So I hate to tell you, all our information is public. Our social security numbers, our bank accounts, our credit card numbers, all that stuff is out there. Why is it out there? Because there have been tremendous amount of cyber breach and cyber events that have occurred through the years, and the hackers are selling that data on the dark web. And the hacker organizations or criminals are taking that data and then creating, whether it's a standard phishing campaign and or a targeted campaign called a spear phishing, to do these attacks to get access to data and to lock up systems and things of that nature. So one of the spear phishing examples that had recently happened a few months ago was Twitter. So you remember the news that came out, Elon Musk, the Kardashians, and President Obama, their accounts were hacked. These hackers use a spear phishing target attack to get that information and steal that data. With all that's happening, we're seeing an increased regulatory risks are expanding. And when I say regulatory risks, 2 years ago, I believe, is the time frame. In Europe, they put together a GDPR or a general data protection regulation, real specific, real hefty fines for companies that do not adhere to holding data in a private way or holding privacy data and then having breaches. A lot of regulations. So recently in California, actually January of this year, they took the GDPR and didn't go as extensive as the GDPR, but they've implemented their own regulations and fines associated with that. In my state, in New York, we did something similar, not as extensive as California, but there were regulations and fines that you have to pay if in fact you have a data breach or you're not holding the data, the privacy data securely. So, for example, Dunkin' Donuts, I don't know if you heard about that hack, but that happened a while ago, but they didn't feel it was important to tell anybody. And then when the news came out, they actually had the hack, and the time frame for that hack was so long. New York, for example, filed a $650,000 hit or fine against the parent company, Dunkin' Donuts, because they were not forthcoming in explaining and notifying everyone that they had a breach. With all that's happening regulatory-wise, we're seeing obviously litigation and settlements are increasing as well. So whether it's a class action suit, we're seeing lawyers going after firms for their clients, or whether it's class action or what have you, to get money for those particular data breaches. I just read something yesterday in Business Insurance, and I posted it on my LinkedIn account, that First American Title national company out in California had a breach. And because of that breach that occurred, their stock price plummeted. So there's actually not only the firm had to pay for the breach, they also have a D&O claim against them from a securities perspective because your stock dropped. So from a perspective as a public company, you just have to not just look at the security side of it, you got to look at the ramifications. What's going to happen to your stock if your data is stolen? And in that particular situation, we're seeing other types of lawsuits occurring, not just from the breach perspective, but other areas such that, with that example, with that title company had that D&O claim or the securities claim against their D&O carrier for that. Defining private health information, personal identifiable information, PHI, PII, is a moving target. Everyone's definition could be different. So you really have to be up and know exactly what's going on there. And again, states define it differently, and they encompass other things associated with their PHI bucket or their PII bucket. With all that's happening from a ransomware perspective, we're seeing more and more claims hitting our carriers from a business interruption or dependent systems side. And what does that mean? Look, we're in a world where all our applications are on the web, or not the web, but in the cloud. And if you can't do your job or answer questions to your customers or pay claims in the healthcare side, you're going to be unable to make money. So we're seeing more claims hitting the system where there's a business interruption or dependent systems claim, and they're being filed with the carriers as well. Last but not least, we sell E&O, D&O, EPLI. Those markets are hard. When I say hard, it's the premiums are much higher, limits are less, and retentions or deductibles are higher. So it's a hard market. In the cyber world, it's increasing a bit compared to a year or two ago from a premium perspective, but it's still doable and more affordable to have a program in place and that's affordable and also extensive, and have a lot of different broad options with that. So that's kind of a snapshot of what's happening trend-wise. I try to use.
Paul, can I jump in there for a second?
Yeah. Yes, please.
And good afternoon to everyone. It's a pleasure to have you. Just a couple of quick comments about emerging trends, and I'm thinking specifically about the second bullet point, social engineering, spear phishing. One other kind of hacker tactic that I have seen a real increase in is what's called password spraying or password stuffing. Password spraying is an emerging tactic, and it really has developed from the fact that there have been so many hacks out there. There's hacks, literally every day that involve the theft of people's email addresses and their passwords. And all of that data is sold on the dark web. People pay money for this. And what a lot of hackers will do is they'll buy email names and passwords, and they will use that to kind of guess. Once they figure out that they want to target a particular individual at a company, they'll guess what their password is based on stolen credentials for that individual. The theory being that most folks will frequently reuse passwords. So what they typically do is a lot of companies will lock you out if you do 5 attempts to get in, and they'll take basically 5 emails and passwords that they've stolen or paid for, and use that as a mechanism for getting into someone's system. Password stuffing is not quite as targeted as that. Instead of having credentials for an individual, password stuffing is essentially guessing what someone's username and password is based on what are commonly used passwords, like, for example, 12345, or password, which in this day and age is still a very commonly used password. So believe it or not, that's one of the ways that a lot of these hacks occur, is simply by either guessing what someone's username and password is, or by using credentials that have already been stolen previously. The other comment I wanted to make is you have a bullet up there about defining PHI and PII as a moving target. And you're absolutely right about that. Different laws are defining that differently. I'll tell you what else is a moving target: the concept of consent. A lot of these laws, privacy laws, will always provide an exception for consent, but they don't always have the same definition of consent. So some laws will say that it's an opt-out mechanism. Some laws, it's an opt-in mechanism. Some laws, the opt-in has to be prior written consent. Other laws, you can have implied consent. So that's a tricky issue as well. We can get into it a little bit more when we spend some more time on litigation and liability.
Those are great points. Thank you, Phil. I learned something. I never knew password spraying and stuff. Excellent. Thank you. We'll have to add that to our presentation, Mike. All right. We opened up the presentation. There's a fly flying around. I apologize. With all the ransomware and cyber events that are occurring. And again, you open up your email, you surf the web to see what's going on news-wise, and you're seeing every day something happening. What we're seeing, and Phil, you can attest to this as well. We're seeing typically financial sector, healthcare sector, municipality sector are the ones that are getting hit pretty heavy by cyber criminals. There are some cyber criminals that they put a moratorium on healthcare because of the pandemic, believe it or not, and they promised they wouldn't hack a hospital or what have you. That's just one of many out there, but there are other cyber criminals hitting organizations such as carriers. United Healthcare, for example, had a breach. Anthem Blue Cross Blue Shield had a breach 2 years ago, and I think the fine was in the $700 million range just for the actual fine for having that, the PHI stolen. But bottom line, not to hit every single one of these points on this slide, but the key here, we're talking about ransomware. Ransomware accounted for 41% of all cyber insurance claims in the first half of 2020. Another point I want to make, since we're all working remotely and our kids are going to school remotely, hackers have a bigger pool, if you will, to get into systems. In our company, we don't allow any flash drives to be put into our laptops. You can't download data, you can't extract data. It's turned off. That's another way, if you're having your employees work from home, they could be using maybe they're not using your company sponsored laptop, maybe they're using their tablet or they're using their phone. And these are other ways hackers can get into your system. Even if you have a VPN and all that fun stuff, if you're using bring your own device, your BYOD, for example, that they can access your system too. So bottom line, these things are occurring. And I mentioned those 3 market segments, but we're also seeing it in our business on the insurance side. Like Gallagher had a hack 2 or 3 weeks ago where their systems were down The brokers couldn't access information, their customers couldn't access information, their actuaries couldn't access information. So, when these things occur, you pretty much can't do anything until you either re-image your systems and or pay the ransom to get the key to get your data back. So that's kind of my point I wanted to share with you on that. Phil, you want to add anything?
No, not on that slide.
Okay, all right. All right, so get to the exciting piece of the presentation, cyber insurance and policies. What are the basics that you have to understand? You want to make, from a liability perspective, first party, third party. If my customer is filing a claim to their insurance carrier for a breach, that's first party. Third party is someone else is filing a claim against me and filing it to the insurance company. You want to make sure you have that coverage in your cyber insurance policy. We're going to talk a lot about notifications, credit monitoring, and forensics. These are all important pieces because, as Phil talked about, there are regulations and fines that are out there. You want to make sure you have coverage for those and the systems in place, as in from a data breach and forensics, to have all that available to do all the work they need to do in order to fix the problem. Not to beat a dead horse here on ransom. Ransom is a big ticket item, and I'm not going to spend more time on that. We kind of talked about that already. Everything that we're talking about today, firms have an obligation to keep the privacy of their customers within their system, but these breaches are occurring. You want to make sure you have coverage for that as well. With what's happening, we talked about this as well initially in the cyber trends, dependent systems. If I can't do my job, my customer can't do their job because their systems are locked up and or their cloud application is locked up, they had a hack, you have to have coverage for that as well. And last but not least, we're seeing a lot with fraudulent funds transfers. So we had a customer where their property management division was hacked, and the hacker identified all the customers and the invoicing of those customers, and they socially engineered a wire transfer that looked real to all the leased customers, and those customers paid through a wire transfer all their rents for a month. So that particular client had no revenue coming in from their customers due to that fraudulent fund transfer situation. One of our clients, and we acted quickly with the carrier. We recouped some of that money and we filed the claim, obviously, for the rest of that. But it's important to have coverage for fraudulent fund transfers as well. And last but not least, if you hold data for payment card industry, credit card, there are regulations and fines associated with that as well. So that's the basics of a cyber insurance, the key parts. Then when you get into the actual.
Hey, Paul.
Hey, Paul, can I double back for a second? And I just wanted to hit on a couple of points there.
Sure.
On that last slide. I know we've talked about ransom quite a bit, but I wanted to give you some personal experience I've had with some recent ransomware attacks. I think you mentioned at the top of the presentation that you had a claim for $5 million. I've been handling a number of ransomware attacks this last summer. One of them was initially it was a $9 million ransom. I had another one that was an $11 million ransom to begin. And I'll tell you, one thing that's happened with ransomware is it's evolved from the kind of attack where the bad actors encrypt your machines and they ransom you. Now a lot of the bad actors are stealing data. They're exfiltrating documents from a system prior to executing the ransomware. And what that enables them to do is double ransom you. If you've got, what they'll say is, we've got all your data. They'll send you screenshots, kind of proof of life screenshots. And they'll say, if you don't pay us 9 million, 11 million, whatever, we're going to dump this on the dark web, and you're going to spend millions of dollars trying to figure out what's in there and having to notify your clients. So it's kind of, unfortunately, an effective new evolution in ransomware. It's one of the reasons why I think you're seeing these ransoms go up. And my experience is, some clients are paying those ransoms. The other 2 points I wanted to make real quickly on privacy liability. This is a lot of what I do. I'm a litigator and I specialize in data breach and data privacy litigation. And I'll tell you, this is a rapidly expanding area. There are sort of common law litigation type claims, negligence, breach of contract claims that are inevitable if you have a data breach of a certain level. We've seen those for a long time. And you think about Equifax and Target and Home Depot. Those are the big ones, but I can tell you, if you've had a big breach, there's a decent likelihood that you're going to see litigation from that. More recently, we've also seen a lot of state laws that allow for private rights of action. So there is a biometrics law in Illinois that allows for private rights of action if a company has collected someone's biometrics without their consent. California has a new law, the CCPA, that provides for private rights of action if there's been a data breach that's caused by a lack of reasonable data security controls. And there are statutory penalties of $100 to $700, $750 per person per incident. So you're seeing a real uptick in that kind of litigation as well. In addition, under privacy liability, there are all the regulators, state regulators, prudential financial regulators, like the OCC. They've been issuing fines. The SEC has become much more involved in investigating companies in the wake of data breaches. And of course, the FTC, another entity. So it's an alphabet soup of regulators out there that are going after companies when there's a breach. And my last point is with regard to PCI. This is maybe the biggest liability that folks don't know about because it doesn't really make the papers very much. PCI is payment card industry. So if you're a company that takes credit cards, you enter into a contract with a bank, and as part of that, you agree that you're subject to the payment card industry's data security rules. And if there's been a breach, the PCI Council will come out and they'll audit you. And if they find that you were in breach of the rules, they issue fines, and those fines can be significant. They're often 7-8 figure fines. So I would not overlook, if you're a company that's taking credit cards, I would not overlook the importance of PCI insurance.
Right. We've been talking about, large organizations that have been hacked, but, I do want to reiterate that from our statistics, we're seeing 90% of small to mid-sized firms don't have adequate cyber insurance or no cyber insurance at all.
Yeah.
Not to say that if you're a smaller company, you're going to get hit with $1 million ransom, but any type of event, whether it's a cyber event or a ransom event, and if you're a small firm, if it's $150,000, you have no insurance, that's out of your pocket. And that is, in a time during this pandemic where a lot of firms are hurting, that could really put you out of business. So anyway.
Hey, Paul, can I
Yes.
just like to say something relative to what Phil said to reiterate that, we probably had 7-figure ransoms in the last 5 months. The one we had yesterday that Paul was referring to, $5 million ransom, exactly what Phil just said. In their gig, they said, hey, listen, we know you have backups. We know you can have, you can restore your data, but we stole 5 million records, and here's what we want for them. And so, and it's kind of cool because that they're, in these type of new ones, I mean, they're pretty sophisticated. They tell you to call a 1-800 number and speak to the customer service, and then they walk through the negotiation, which is kind of cool. But just in the last year, those ransoms have gone from 100 to 200 to 1 million to 5. We're usually able to negotiate them, but I got to tell you, unless you have some form of a coverage that covers that, I mean, this is a catastrophic event to even small businesses. And these aren't, all the targets. I mean, our clientele personally is not targets. I mean, our clientels are companies under 25 million in revenue primarily. And so they have less sophistications, et cetera. And even, the one that Paul mentioned, that was a property manager, they sent out fake invoices to all their tenants, and their tenants wired out $700,000 worth of rent payments before we caught it. And so it really affects every single industry. And, you know, it's just a fact of life. So this is your presentation. I don't want to jump in, but I thought those two things are pretty important.
Right. More the merrier. All right. So as I was getting back to the key coverage parts of a policy, you know, Mike just said, you know, and what Phil said, having a policy that has a true breach response team, and that encompasses your data breach coach, your forensics, and the whole team to be deployed when these events occur to stop the bleed from a data perspective and to find out exactly what happened. You know, Phil really mentioned the PCI fines and penalties. I won't go into more detail on that, but that's important for you as a coverage perspective to have that built into your policy. Some policies give you full limits, some policies give you some limits on. You know, we talked yesterday at our ops meeting that we don't think obviously $1 million policy today is adequate. And from an advisor perspective, it's our job to really work with our clients to identify and understand what their exposure is. And your exposure is really defined by how many records you have, what type of records you have, the type of security protocols you have in place, the revenue you make, obviously. So maybe, you know, maybe 2 million is the right one or 5 million is the right one. But the example that Mike used and when Phil used 9 million, 11 million, you really have to evaluate your customer and identify what is the right limit on that. I can't hit this home hard enough here, but you know, there are some carriers that make you pay everything and then submit a claim. That doesn't work in today's time of Bitcoin. I don't even know how Bitcoin works anymore today. So we have carriers that have language pay on behalf of. They will work with their data breach coaches and their forensics team to negotiate and to pay that ransom on behalf of the client rather than having the client do that. Anyway, the other could you put whoever saw, could you put on mute, please? Thank you. So it was also important to have, you know, the third-party cloud data and breach side of it. You know, again, we not to beat a dead horse here, but we're using applications on the cloud all the time. You want to have coverage for that in case those go down, and that goes in the hand we talked about earlier with business interruption and business loss of income. It's important to understand, you know, when you fill out an application, you say you encrypt the data, and if you don't encrypt the data, and you have a loss of you know, a data breach or a ransom event, and they evaluate that and identify that you didn't encrypt your data, you may not have full coverage or that claim may be denied. So it's important to understand you know, if you have a requirement by the carrier to encrypt your machines, you better have that set up. And last but not least, you know, Phil talked a lot about the social engineering side of it. You have to have coverage for that because that's how hackers are really sending you those emails that look legitimate from Chase Bank or Microsoft 365, and someone is clicking on that, whether it's an employee or a subcontractor, and that's how the hackers are getting in there. You want to have coverage for that as well. As I mentioned earlier, not all policies are alike. We have some customers that think that they have full cyber coverage through their E&O or their GL policy. Those aren't full limits. Typically, these value add-on policies are $100,000, $150,000 top or max, and they only cover first party. They're not covering third party. They don't even have a full forensics team. So what we recommend, if you're going to look at, you know, cyber insurance, get a separate cyber policy and make that primary non-contributory. What that means is who's going to go first during a data breach. If you have multiple coverages through your add-ons, you want to make your separate cyber policy primary non-contributory so that you get full limits and full coverage from the get-go. Some of the other things that really distinguishes a separate policy versus an add-on policy is obviously the limits. We talked about having the ability to go higher limits and have higher sub-limits. We talked about the primary non-contributory part of it. But really the key to the policy is really having those folks on the data breach side and the forensics team to really dive into what happened, how it happened, and to fix the problem so it doesn't happen again from that particular cyber event. So at this point, I'm going to turn it over to Phil. He can talk a little bit more about some of the legal requirements that you have to adhere to if you have a data breach.
All right, thanks, Paul. So I'm going to take it from the point in time where your internal team, your information security team, IT team, has confirmed that there truly has been some kind of malware or a data breach. Many times there's an incident and does not rise to this level because IT will determine it was just a glitch or something that's pretty minor. But if you have a true malware incident, then the first thing that you're going to need to do is bring in outside counsel under privilege, who's going to be able to direct the data breach, usually in consultation with a company's general counsel, their chief information security officer, sometimes their CTO or CIO. There's many folks who are involved in this sort of quarterbacking a breach. Getting forensics involved early is really important. There are many outstanding forensic firms out there. CrowdStrike, Ankara, Mandiant, I mean, there's dozens of them. It's really important to get them in there. They are really experienced. Many of them have handled thousands, if not tens of thousands of breaches. And they'll be able to quickly get into your network. They'll be able to tell you, sometimes they'll mount endpoint monitoring systems to see whether the bad guys are still in the system. Sometimes they will take logs and forensic images and they'll begin looking at those. A lot of times you need forensic folks to come in and confirm that the malware has actually been contained. All of these things are really critical, and you can't do it typically without a good forensics firm. Then comes the hard part. Well, from a legal perspective, one of the hard parts, and that is figuring out whether or not a company has any breach notification obligations. So every state in the United States has breach notification laws that require companies and nonprofits that have suffered data breaches to notify both state attorney generals or sometimes consumers themselves if a breach rises to a certain magnitude. Every law is a little bit different, so I'll just give you what's kind of the basics, and that is if there's been a breach involving unauthorized access or acquisition of data, and that data is sensitive. And sensitive data under these laws is typically defined as data that can be used either to commit identity theft or data that will allow someone to access a financial account or a credit card account. So it's things like first and last name, or first initial and last name plus social security number, driver's license number, government ID, healthcare information, medical information, biometrics, username and password, particular username and password for accounts, financial accounts, credit card information. All of that would trigger a breach reporting obligation. So that's what you've got to figure out. A lot of these breaches are really messy. The documents that may have been stolen could be unstructured, so they could be like, emails or Word files or PDFs that have to be sorted and culled using third parties who are really skilled at that. So that becomes a real messy but important part of the engagement. And then you have to figure out what your reporting obligations are. So typically all of this work results in a giant breach reporting chart that will explain to a company exactly what their reporting obligations are for each state. And then you'll have to make that reporting. Each state has very specific laws about what has to be in the report and how that report is transmitted. It can be typically transmitted by mail. A lot of states will allow you to email these notifications as well. Note that a lot of states now require credit monitoring if there's been a breach. So keep that in mind. Credit monitoring is getting less expensive. Typically, you can buy in bulk. A lot of companies will buy in bulk ahead of time so that if they have a breach and they need 10,000 credit monitoring accounts, they can quickly call up TransUnion or one of the other companies and get those moving. Oftentimes, after all this has happened, companies are under siege. In big breaches, there'll be tons of customer control, customer calls. There may be regulator calls. There may be calls from the media, and that can be really a drain on the business. I think if you look at most surveys and they ask companies what are they most afraid of in a data breach, it's often loss of reputation. No one wants, and particularly this is true in the financial services industry where being able to protect data is really a selling point for a lot of companies. So there can be there may be a need to get a third-party crisis management company in there to help do PR and try to handle the sort of the press part of all of this. Each state has slightly different timelines for breach notification. The quickest state right now is 30 days, that's California, but there are other laws like New York DFS, the Department of Financial Services, has its own regulations, and that has a 72-hour reporting requirement. Hopefully no one here is subject to the GDPR because that also has a breach notification requirement that's 72 hours. So sometimes you have to move really, really quickly when you've had a breach. And I'll just tell you, if you're looking at costs, forensics tends to be a really, really big cost. Notifications can be very expensive, especially if you have to mail notifications and you've got to mail them to, 100,000 people. Those costs can become very expensive very quickly.
Right. Well, Phil just tackled 3 slides. But anyway, when we get to those slides, we'll just breeze through those because we just talked about them. All right. Not to freak you all out here, but this is an infographic that we put together for commercial real estate broker accounts. So you could have the most secure network, top-notch IT staff, VPN, educating your staff, what have you. But if you look at the schematic, all these different areas of entry points or passageways for a potential hacker to hit your system. And what Phil said earlier with the Target data breach situation, they were hacked because an HVAC contractor connected his or her system to their main system. And his system or her system was corrupted. And that's how the hacker got into Target and then infiltrated and trolled around for months to steal all that data. But anyway, so you look at this schematic, from a commercial real estate broker, we all have outside services with your data, payroll and CRMs. Your website have entry points with links, maybe links to other services you provide to your customers. Your backup on the cloud, your email system, emails from vendors, emails from clients, etc. Property managers, Mike talked about one of our customers, how they were infiltrated and fake invoices were created. They have entry points that way. Your financial data, like we talked about in the beginning, our data is out there. Title agents, your lawyers, your banks, your vendors, your appraisers, your engineers, and third-party listing sites, and the, Crexy and LoopNet. These are ways from a third-party perspective through your applications and how you're all connected, how a potential hack can occur even in the most secure environments. So, we're going to skip this slide. This is what Phil explained a few minutes ago is kind of what this slide does. The discovery point, the beginnings. How did it happen? How do you investigate? Having your public relations, etc. The notification requirements that he talked about. He talked about how are they, and your data breach coach at your carrier, who would be contracted with the carrier, really are your quarterbacks. They have all that information. That spreadsheet that Phil was talking about, they have all that. They know what the regulations are, time-wise for a state and the costs, etc. They have all that, and that's why it's important when you have a cyber policy to make sure you have those components in there. Some carriers have a waiting period. You have to be down for 48 hours. I mean, some carriers have without unreasonable delay. You have to know what that is in order to have the insurance kick in and start reimbursing you for the losses that you are incurring from the data breach or ransom event. And then what, Phil said to wrap it up, you're being, bombarded. I think, what is the word you used, Phil? When you have all the people calling, you're just,
Under siege, maybe?
under siege. Perfect. Yeah, the state and the Fed and the federal agencies are hitting you. Litigators are hitting you on a private basis or a class action lawsuit. These are the costs. What Phil said is correct. The biggest component of a data breach is forensics. Why? There's so many data events occurring, cyber breaches occurring, and not enough forensics people out there to do the work. So depending upon the size of your organization, how many machines you have, et cetera, how big the breach was, et cetera, is going to be the biggest component of the cost for forensics. We see $600 to $1,000, maybe even more than that on an hourly basis.
Yeah, and Paul, let me just add that, some of these new style breaches that we've been talking about, particularly the ransomware, where they're stealing data as well as, locking up machines. Some of those breaches require different vendors than I think have typically been involved in data breaches, particularly data mining vendors. I kind of talked about this earlier, but if you're a company and you've had, 100 gigabytes of your data dropped on the dark web, and you've got to figure out what was dropped so that you can determine if you need to notify consumers, you need to get a specialized vendor in there. It's not going to be your typical kind of forensic vendor. It's going to be a data mining expert. So not only is forensics right now the biggest cost for a breach, but I think that's likely to increase just because you're seeing some of these breaches become more sophisticated.
Right. Good point. And then your breach coach itself, having your quarterback, they're charging $400, $500 an hour. Just because you have a ransom, you pay $150,000 or $200,000 or $1 million. That's not the end of it. There's all these other costs associated with that. What Phil said earlier about credit monitoring. There's a cost associated with that. There's fines and penalties that Phil talked about. There's just costs associated with that. And then that lost income, that under siege situation where employees are involved with forensics and involved with the data breach coach, you're losing income. And then what Phil said earlier with public relations is huge. How do you get the confidence back? Why would you go back to Wells Fargo, for example, what happened years ago with them, for example, then that list goes on and on and on.
Hey, Paul, just one quick point on that. In these numbers, the average cost of an uninsured breach is about twice the cost of an insured breach. And the carriers have all of these people lined up, and they actually have better rates than these. But if you just imagine, the breach we had yesterday happened at 3 o'clock in the morning. I got the first call at 5. We were on the phone with them by 6, right? And so if you're an uninsured person and you are going out, now you're going to have to find your people. You're going to start searching. And it's just like buying an airline ticket to San Francisco with a 10 minutes notice. You're going to pay whatever's available rate is, and you're going to get whoever is available. And so a lot of these companies certainly have these people lined up. And like I said, within an hour's notification of us yesterday morning at 5 in the morning, we're already on the phone, we're in the systems and doing what we need to do. And that's really one significant difference between having basically an insured product versus, what happens if I handle this on my own.
Great point. All right, so there are things you can do as an organization to mitigate your cyber events. First and foremost is dual factor authentication, also known as multi-factor authentication. How does that work? I mean, when we go onto our applications, you'll get a little window box that come up and say, look, we're going to email or text you a code. You get that code, input that code in this box, and you'll have access to the system. Hackers any firm that doesn't have dual factor authentication, I think you've increased your likelihood of being hacked threefold at least. Anyway, that's the first and foremost thing you need to do. The second thing is you really need to get your employees educated on how not to click on the wrong email. I mean, these emails, as Mike said, are sophisticated. These firms are sophisticated, and they're creating logos that look real. But there are ways around to find, well, maybe the email address isn't the right email address or what have you. There are ways to find that whether or not an email is legit or not. We use a firm Know Before. There are tons of training companies out there that provide that training. As a company here at Access Insurance Services, we have mandatory training every year as an employee. New hires have to go through the same training. As a producer in California, I have to do training every 5 years on their cyber portal. And Mike has, since we're in this business, he is taking time to educate us and have separate cyber sessions with the long-term employees and the new employees to really get them up to speed, because we don't want to be in a situation where we're hacked. We want to help our customers prevent that hack from occurring. But that's important to really have a policy in place to train your employees. In the old days, having static backup was great, but as Mike said, this particular client, and as Phil explained, they're in there before they lock your systems, taking a ton of data. So even if you have static backup, it was good to have that set up. But if you're in a ransom event, they're going to hold you hostage and say, if you don't pay us, we're going to take that data, and you're going to have, as Phil said, zillions of dollars of exposure from regulations to cover all that. I'm going to finish this up by saying that any type of wire transfers, anything with banking, anything with paying a bill, you really can't look at the email from a fraudulent actor or a criminal or a hacker, because on that email, they'll have a separate phone number to call to verify that. You really need to talk to your established relationships you have with your banks, with your real estate firms, your attorneys, etc., before you do any type of wire transfer, any type of transaction electronically. You want to make sure it is legitimate. And last but not least, I know we're not trying to pitch insurance here, but you really got to talk to your P&C advisors and your P&C brokers that you have at your firms, and have them evaluate your cyber risk and really have a to-do list to look at implementing a real cyber policy to protect your assets. We're open to talking to your P&C brokers. We have a wholesale division here at my company. We can work with your producers, or if you have any questions, we'd be more happy to answer them offline as well. So with that, is there anything you want to add, Phil, before we wrap it up for Q&A?
Yeah, I mean, there are every one of the bullets on this slide is an absolute, in my view, to do. A lot of them are, probably easier than the other things I'm about to talk to. There are numerous other things you can do to mitigate risk, but they involve, things like getting endpoint monitoring or getting data loss prevention software in place. These are really helpful tools that can lower the risk of data being stolen. One simple thing that I know a lot of companies do, a lot of financial institutions do, is they disable any ports, any USB ports on laptops, so someone can't stick in a flash drive and walk out with company secrets. That's a real simple thing to do. It's a pain in the neck, right? Because there's a lot of legitimate uses for that, but I've seen a lot of banks go that way, I can tell you that. The other thing that I'm going to spend 30 seconds talking about, we could probably spend an hour, but I believe that third-party risk management is an area that is really getting more attention, and it should, because many, many breaches, particularly over the last year, have been the result of vendors. Companies really, everyone is sending their data out to the cloud. They're sending it out to, hosted solutions, managed service solutions. And those vendors are the ones that are getting attacked. Some of them, particularly smaller vendors, don't always have the greatest information security. And, they leave ports open. They're using older protocols that don't have multi-factor authentication. And all the bad guys, they scan the internet for these things and they'll find them, and that's who they target. So I think it's really important for companies to take a hard look at their third-party risk management programs, because that is a huge risk from what I've seen.
Bill, one thing on the third parties that we've seen is when you sign up the contracts. I don't know if you ever go through an internet deal and you have to cursor down and accept all the terms.
Yeah.
When you get to that, one of those terms is we limit our liability to fees paid. So you outsource your stuff to a third party, and I'm not going to pick on a RealNex or LoopNet or something, but if you put information into one of those types of agreements, it could be QuickBooks, it could be anything, chances are really, really high that the contract that you agreed to limits their liability. And so when they get locked up, you know, we had a company that outsourced their server to a company that had 140 companies in it. They had a $1 million policy and they got hit with a $500,000 ransom. They didn't have enough money to be able to protect us. Our policy kicked in, went in and helped to go through it, but they outsourced and they said, well, aren't they responsible for that? And they go, yeah, but they don't have enough money to unlock all of your files, pay your ransoms, and do your stuff. And so just thinking it's in the cloud is a misnomer, because oftentimes with some of these smaller deals, they have a heck of a lot less protocols and controls in place than you do. And so it really is a risk. It's easier, but just thinking it's in the cloud doesn't eliminate you from the potential risk.
Well, that kind of provision is standard liability cap. And you should look to see to negotiate that if you can. Problem is with a lot of these cloud vendors, they're so big, you don't have any room for negotiating. And you ask them about data security, they'll send you sort of their information security plan. Some of them will send you a SOC 2, whatever. And you often don't have room to negotiate that either. There's sort of like, this is the way it is, take it or leave it. So that is an unfortunate reality of our move to the cloud.
I haven't really looked at the questions that have come in. I'm not sure. Stephanie, have any questions popped up on the?
There have been some questions. I'm going to pull your screen down so we can see
Yeah.
everyone.
Okay,
There were
thank
some questions put in to the chat. I'm going to call on those folks first, and then we can open it up to the group. Rick Varnell, welcome.
Thank you very much. And Paul and Phil, I love that you're doing this in an educational way. I'm with an organization called Building Cybersecurity, a nonprofit. And I'm working very closely with a number of different folks, including Aon, with their insurance partners on our board of directors. My couple of questions that I have, one is, I've been hearing kind of troubling trends on the ransomware side around insurance companies considering not participating in any part of the ransom whatsoever and not paying the ransom at all. Is that a trend? Is that something that, and I have two questions, but that's my first. Are you hearing that kind of a trend?
Well, I'll tell you my insight on it, and then Paul may have his own. I know that there are insurance companies that are more wary of paying ransom because of OFAC problems. Not a lot, but some of the hacker groups are actually listed as terrorists. They are subject to OFAC sanctions, and if you negotiate with them, you are subject, the insurer is subject to OFAC sanctions. That's become an issue over the last 6 months, and that may be driving a resistance for some of the cyber insurers. They don't want to negotiate a ransom unless they've got someone who will verify they're not on the OFAC list.
So frequently, and I've heard you walk through some of this, and like I say, again, I agree with everything you were saying, just to be really clear. From the standpoint of how the process works when you become a target and you're negotiating, some folks take the approach of not negotiating at all, right? And others take the approach of trying to negotiate. Generally, because of brand recognition, our observation so far is that they try to negotiate. When that happens, what we're seeing is that frequently when they send a sample of the data, it's usually corrupted already. And I think that's an important message. I'm curious to hear if that's what you run into as well.
Well, a lot of times it is corrupted. So what we have done in those instances is you have to make sure that the data is being sent to like a clean room. So it's not touching anyone's network. And then again, I keep saying this, but you need a vendor, someone who's specialized in this to be able to work with that kind of data.
Last question, I promise. And is, are you running into issues, or does your organization run into issues with cyber to the OT? And described as there's IoT or IT, your network, and OT, the sensors in your building for folks that are listening, right?
Yeah.
I'm running into an alarming amount of scenarios where cyber is starting to come into the OT side of things. And the OT side literally can cause physical harm, right? So I just kind of wanted to get your take on that.
My take is that I have a lot of manufacturing clients that are extremely worried about that. There have been some very, I guess, newsworthy breaches where bad actors have gotten into sensors and plants, shut down plants because of that. So I haven't really had many breaches that are like that, but I know it's a sensitivity, and I know it's, it's out there.
Phil, I'd like you and I to maybe have an offline chat at some time in the near future, if we could. And thank you for your time.
Thank you. And Mike, are you still on?
Yes.
Okay. You want to explain that situation with the copier where they got into the copier machine?
Sure. Well, there's two things. One, I'd like to address the OFAC one. So OFAC issued a memorandum about a week ago that said exactly what Phil says, that, hey, by the way, some of these payments to these groups can be considered under OFAC rules, and you should put at least take that into consideration. But OFAC is not law, and the FBI has come out very specifically and said we are not going to enforce that. It's very similar to the Cole memo on cannabis. It's illegal, federal for cannabis, but we're not going to go after folks, even though that's been rescinded. It's the same issue. The FBI is not going to get in the way of ransom. We've had hospitals that go down. There's a case in London right now, or Germany right now, where a hospital was shut down and somebody was turned down. They died on the way to another hospital. The FBI is not going to get in the way of that. And we haven't seen a single carrier balk at paying it. What we do see sometimes, like Crypsis, for example, has an organization they use. It's an intermediary. The carrier will pay the intermediary, and then the intermediary will pay the ransom. And since it's in Bitcoin, they're jumping country to country to country. You really don't know. And so we really, we pay these literally all the time. We haven't seen anybody not pay it. And what Phil had said before, we've now taken it to a next level, that it's not just your encrypted data. It's, hey, by the way, I got your stuff. I'm going to put it on the street. And that is really worth more in paying the ransom than not backing up. And I would say, I don't know what Phil's statistics are, but we almost always pay the ransom. And so, we negotiate it down. Like there's one hacker out there that says, hey, if you pay it early, it's right on their website, we'll give you a 20% discount. And so we've negotiated them down, but we almost always pay that. And then on the other issues that you're talking about, there was a client, they hacked into a copier that was connected to the network, reset the settings so it heated and it caught on fire. And then they hacked into the alarm system and shut off the forward to call the fire department. And they were really just screwing with the client just to kind of see what they can do. But if you take that and you put it to a manufacturing, to a nuclear power plant, to, municipalities, et cetera, it's a real significant risk of, just chaos, and it can be very dangerous and cause bodily injury. And so it's a next generation of something that we really have to look at.
Great questions, Rick.
Yeah, great questions. And Rick, I'll definitely connect you with both Phil and Paul. Steve Langford, I think you had a question?
Yeah, Paul, Phil, Mike, thank you for the presentation. This is extremely informative. Actually, one of your slides just answered one of my questions, but I do have another, and that is, what's the likelihood of, obviously from a hacker's perspective, obviously they would want to get more bang for their buck, and I would think target, large to mid-sized businesses. But what's the likelihood of small businesses being impacted and kind of on a potential regular basis? What are you seeing? I don't know if there's any data to identify from a percentage standpoint of all the data hacks or breaches that are being performed. How many of those are considered or fall in the category of small businesses?
Great question. Let me just tackle that first, Phil. So as I stated, 90% of small to mid-sized employers don't have adequate cyber insurance or no cyber insurance. There are a variety of different hacker organizations. The one sophisticated one that Mike talked about and what Phil talked about with the larger ones, but there are a ton of other organizations that target low-hanging fruit. So we feel now with the remote workforce and kids being taught remotely, there's more of a chance. And actually on that slide with the different pieces of the news flashes there, the amount of hacks occurred because of remote has increased dramatically. So I would say, I've read different things through the year, through Beasley's reports and Verizon's report, that the likelihood of you being hacked is greater today than it has ever been. That's what I have to share. Phil, you have anything you want to add?
Yeah, unfortunately, I don't think being a small business makes you sort of immune, or that the hackers are going to ignore you. They are looking for vulnerabilities. They're looking for folks who have open ports and the kind of things that are easy to exploit. Oftentimes, that is small businesses. So I do think there's vulnerability. I'll also say that I think on one of Paul's slides earlier, he mentioned other kinds of threats that are out there. So like wire fraud misdirection schemes, that's where a bad actor gets into a network and it redirects a wire payment to their own bank account. Very, very common. And I see those kinds of exploits really targeting small to medium-sized businesses, because larger companies tend to have controls in place to prevent that. Smaller companies often don't, and they become targets for that.
Great question, Steve. Thank you. Stuart, welcome. I'll let you unmute yourself and ask your question.
So can I change my question actually from the one that I
You
posted?
most certainly can. Absolutely.
Because I had a kind of very fact-specific question about, are they still demanding payment in crypto for ransomware? I assume that is the case. The question that actually I really want to kind of hit on, or have you guys expand on, is the interchange that Mike and Phil had, where Mike was saying that you need to watch out for contract provisions with either vendors or third-party service providers that say that liability is limited to fees paid. And so I'm going to give an example. A number of my clients are municipalities in the Chicago area. They tend to be sophisticated municipalities that actually are very aware of IT vulnerabilities. They've done pen testing. They've basically run through the full gamut of these things. But they work with two types of vendors. They either work with very small vendors, that may make, people who sell like 4 copiers a year, small local IT vendors, or they work with very large organizations. Tyler Technologies is the ERP provider for a number of my clients. Tyler Technologies, 3 weeks ago, which is based out of Texas, where I'm from, which is kind of where my accent comes from, despite being an adopted Chicagoan. Tyler Technologies had an intrusion incident, and for 3 weeks shut down all contact via email to clients and all network access to clients. And that was highly disruptive. So Tyler basically shut down billing cycles for utility bills, for other things. Tyler is such a big operator, though, that when we try and negotiate contracts with them, when we try and say that we can't limit damages to fees, it's a very take it or leave it point of view. It's a what I would call, from what I remember of contracts in law school, a contract of adhesion, that you don't have a lot of room to negotiate. And then on the other spectrum, when you're working with much smaller local vendors, they don't even know about this stuff. So requiring them to have full separate primary cyber liability coverage also is kind of an act of futility at times. And so does that basically put the onus back on the party that has the most to lose. And you're looking at me like, was that a question? No, that was more of a comment than a question, but I'd love to hear more of your thoughts about it.
And my answer is yes, it does. Everything you described is, I've seen it. It's completely consistent with my experience. There's a limited room to negotiate with a lot of these vendors for the reasons that you've already described. You know, for certain vendors, you know, maybe you can get a negotiation going, maybe get it up to 2.5 times fees and costs. You may be able to get a carve out where it's, you know, it's the cap disappears if it's like gross negligence or something. So maybe you have an ability to get more if it's gross negligence. These discussions can be difficult. I mean, that's part of the problem. And I think the route that you, I think, alluded to, which is trying to get a vendor to make certain that they have adequate cyber insurance to cover a claim like that, is the way that I've seen a lot of clients go to try to address it. And of course, the first party cyber insurance, right? So if you know you've got these caps in your vendor agreements, then you've got to make sure you've got your own adequate cyber insurance. You don't have $1 million policy.
Well, municipalities in general are the ones that are getting hacked. I mean, in my area, I can tell you 5 to 10 organizations, from cities to towns to villages to schools, that have been hacked. So kudos to your client in Chicago that are really astute on the IT side. But still, that's an area where we're seeing a lot of hacks.
Well, and I think the reason for that is that so many municipalities are stuck with legacy systems.
True.
That, you know, you will literally have a water plant running Windows 98, and you know, and because of these legacy systems, there's just all sorts of vulnerabilities. And you know, we try and keep up with these things. When we get new SCADA controllers for like our water systems or something like that, we tell them, you know, turn off all the IoT aspects of that. But it's very hard with tight budgets, whether it be school districts, whatever. There's always going to be some attack surface that is vulnerable due to archaic technology.
So Stu, just a quick address of that. I mean, whoever holds the data has the legal responsibility, and you have to just take care of yourself regardless. I mean, in that one hack that we had, like the carrier where our server was in the cloud, our provider didn't have enough insurance. We actually had to pay portion of the ransom for him out of our policy because that was the gig. We worked with a group of municipalities in the Northeast, and I won't tell where it is, but they had 16 municipalities that kind of put together a policy. Each one of them had $1 million limit subject to a $5 million aggregate, which meant 16 municipalities shared one policy, which is less than the ransom on the one count I had yesterday, right? And so we kind of broke that up and did it. And it's really an education at the top level. And, you know, I read one time that our nuclear arsenal is still controlled by floppy disk, right? And so, which is scary in and of itself. But, you know, a lot of these legacy systems, and you get a Microsoft patch today of a vulnerability that came out this morning, right? But these legacy systems that the people have had for years, you know, that they're not being updated every day, and they are extremely vulnerable. And the best you can do is continue to educate, put processes in place, and ensure the rest, because, you know, they really, really are vulnerable.
So I recognize we are running a bit long here. Phil and Paul, do we have time for one more quick question for you?
Fire away.
Great. So Josh Workman, go ahead.
Yeah, I was just wondering, a lot of questions here. Just a quick one was, do y'all see a breakdown of ransomware versus just like malicious malware where a ransom never comes in? And, you know, I guess the client, if they have proper backups, they can rebuild, but it's just a major interruption.
Josh, you mean in terms of like the kind of claims that I'm working with?
I just mean if your files are, you know, someone clicks on something and it like lets something go on your server that destroys the files. It converts them to something that's not, you can't open it, but you never get a note saying, hey, we got your files, send money.
Oh, I see. Yeah, yeah.
So malware, I guess you call that malware versus ransomware.
Yeah, I mean, that's sort of a, you know, like a terroristic type attack where it's someone trying to destroy data. I've had a few of those. I would say most of the claims that I have are someone's either trying to steal data through malware or they're trying to ransom a client. And then I guess the third big one is sort of the wire fraud type claims that I mentioned earlier, where people are redirecting payments to another account. Ransomware is a big one, though.
Yeah, definitely.
When y'all are calling to negotiate a ransom, I mean, I answer the phone, you can't identify where they are or
Oh no, they make it easy.
call the cops or something. I mean, it just seems a little brash.
I mean, the ransomware artists are very sophisticated. A lot of them. Some of them are, you know, like high school kids or just dabbling. But there are some really sophisticated ransomware artists. They have their own web pages, and when they send you a ransom, they give you an email link where you should reach out if you want to negotiate. I don't ever negotiate ransom. If I have a client who wants to pay a ransom, I think Mike mentioned this earlier. There are specialist ransomware negotiators, like Coveware, for example. We use them. We don't get involved with the ransom negotiations.
But whatever questions we didn't hit, I mean, Steph, if you can send those to us, we'll have no problem working together to answer those if you like.
Yeah, I was going to say, I think Rick had one last one, Varnell, if you want to pose it, and then we'll wrap it up.
Yeah, more just an observation, and again, thanks for the time. I just, your last response, I feel like what we're hearing a lot of, and I think that might be helpful for you, for the entire group, is the nature of the threat seems to be evolving a lot to me, right? To folks that I'm talking to. In the past, it's been, you know, generally local folks in the U.S. You know, we like to refer them as, you know, folks in hoodies, right? Sitting down in the basement doing their thing. But over the last year, I've been involved in a program that's opened my eyes a lot to a much more significant threat, which is really more around a bounty system from our nation state's enemies. And it's significant in that it's increased by about 1,000-fold in the last 12 to 18 months. So I was just sort of curious is if you're starting to see, most of this has been on the DoD side, but it's starting to filter into the commercial side, the commercial real estate side in particular. So I was curious to see if you're seeing the profile of the person that is either in ransomware or malware, or any part of it on that side, if you're seeing that evolve in any way that way.
I can tell you my thoughts. Some of the bigger events I've handled this summer have involved nation state actors. The FBI is almost always involved in those because they're nation state actors. The FBI is always trying to gather intelligence on how Maze or Ragnar or one of these other groups is functioning. They are very sophisticated. They're often in networks for weeks, if not months, before they'll execute the malware. And they tend to be the groups that will charge the really, really high ransoms. So unfortunately, maybe it's just coincidence, but I have seen a lot of those kind of attacks over the last 6 months.
Yep. Thank you for that. And James Traynor is a dear friend, by the way. So when you're referencing the FBI, I look forward to catching up with you all in the future. I have to drop. I apologize. But thank you very much.
Well, thanks. Thank you again to Phil, Paul. We really appreciate your insights. This has been, I think people are already changing their passwords right now. I've got a couple of those notes. So if nothing else, and now I'm going to do our double authentication. So wish me luck in dealing with Rick Lackey on that. So anyway, thank you again for your insights. Everyone will receive the contact information for those that were on the call today. You'll also receive a copy of the recording. And Paul, are we able to share your slides?
Sure, yes.
Great, great. Well, you all will see that this afternoon. Stay safe, everyone, and thank you for your time and your insights.
Thank you very much.
Take care, everyone.
Bye-bye.
Thank you.
Thank you.